Yo, what is going on, everyone in the XRP community? I hope you guys are having yourselves a fantastic day today as usual. Over 50-cent XRP. Not gonna lie, that's a pretty good day right there. But guys, we actually do have a sponsor for today's video. Not kidding. It's the fucking smoke detector. Yes, it's gonna go off every 30 seconds until the end of this video. So therefore, it is kind of sponsoring the channel with its own voice. Dude, I wish I was like 6'8", because then I could just punch this thing and break it, and then it would stop beeping. But anyways, let's carry on with the video, guys. XRP price action is looking absolutely amazing. As you guys know it, the weekly chart, it's 3-bar play. I was hoping that the third bar was going to be a little bit more than this, but honestly, I can't complain. I was hoping to be a little bit higher, maybe like to up here or up here. Kind of get that 60, 65 cent close. But, hey, you know what? 53 cent close, not a bad day. Not a bad day. I'll take it. Still got a lot of time here. Got a lot of gaps that still need to be filled. The recent, Terra Luna dump, about half of that pump has been fully filled as a gap. And there is still all of this liquidity up here that is waiting for someone to stoop down and grab it. I want to go down to the daily chart and 4 hour for more perspective. Daily chart, it has its own little double bottom. I notice how on the weekly chart we have our, double bottom and old all-time high, and then you got the daily chart running a double bottom, which led to higher prices. Then you got a little pullback here. All I gotta say is that this right here is looking like it's kind of that just like mid-pump strange activity, if you know what I mean. Every time, XRP pumps, or maybe really any coin pumps, you always have these, like, weird little formations that you can't exactly call a certain thing, I mean, runs up, pull back, double bottom, break above, pull back, retrace. And it looks like it's gearing itself up. XRP's got to be gearing itself up for another 65, 70 cent move. That's just what I see in the cards here. In my experience, when XRP stays above 50 cents a coin for just a long enough time, before you know it, it ends up being like 80, 90, half a dollar. Boom. Right there. I mean, last time, there was a really odd scenario that happened. Back here. It was back here. And XRP was just kind of staying in the 50 cent range for a long time. And then just, bam, immediately dollar per coin. I'm thinking we can have the same thing for us here. But just keep real with you guys to look at what is our biggest battle upcoming, next, is basically this whole level right here. This whole level right here is where sellers are going to get trigger happy, and we need to just take all the ammunition we got and fight back the sellers as hard as we can, flip this current weekly candle that's in the red, and blast through that level. If we can do that, we have pretty much secured ourselves the spot for $1 per, XRP or more. All right, guys, let's get into some other information of today. You gotta see this one. You guys gotta see this one. This is gonna piss you off. Are you ready to get pissed off? Look at this. This is the Swift Community Twitter account. Okay, first off, look at that banner. Look at that banner. That's looking awfully, Ripply. That's kind of looking a little Ripply there. And look at what the Swift Community Twitter bio is now saying. This is Swift. I mean, the 50-year legacy international transaction system that Ripple has been working nonstop for more than a decade to replace. Look at what Swift is now saying about themselves. We're on a mission to make international transactions instant, frictionless, and interoperable. Swift is saying we're on a mission to make international transactions instant, frictionless, and interoperable. I mean, can we get a little lawsuit for plagiarism over here? I mean, it sounds like you stole this directly from Chris Larson and Brad Garlinghouse. Instant, frictionless, and interoperable. I guarantee you, in the last few years, Ripple has published articles and documents using those 3 words in the exact consecutive order. That just pisses me off seeing it. Swift is coming out of nowhere saying, oh, hey, guys, we're just, trying to make things fast and quick and, all work together really great. Who asked? Nobody asked, bro. Nobody asked you. It's like this whole entire, Twitter bio is You know, they're trying to put like a gold medal around their own neck or something. Like they're just congratulating themselves. Nobody asked, bro. Nobody asked. All right. Check out this next thing, guys. We got a little bit of recognition from David Schwartz here over on the Alex Cobb channel. So Jungling tweets out lunch meeting to discuss the development of the X app, which is like kind of like an old little it's like an old little meme picture, whatever. Like got me and the Burger King, and then like this picture of me at Burger King is like literally it's actually in my house before my first day at Burger King, and then people screenshotted it, photoshopped it actually like perfectly. Then David Schwartz responds, "That's a fake image. Here's the real one." So it's nice to get a little recognition from David Schwartz on the channel. And he is following me on Twitter, which is kind of crazy to think about, but yeah. Next one, guys. You got to take this one with a grain of salt. Take this one a little easy. Says, boom. Now it's confirmed Indian Central Bank is going to use Ripple XRP for CBDC. Central Bank of India stated all features of XRP without saying XRP. Well, Central Bank of India stated all the features of XRP without saying XRP, which means it's not really confirmed. Not confirmed exactly. But, you know, nonetheless, this guy put a lot of time out. He, you know, uploaded a good tweet. I understand what he's saying, but you can't really put the confirmed per se. Maybe I've made that mistake before. Again, he is a wild speculator. So, yeah, this is the Central Bank of India. Pretty much, you know, this is kind of a smells like XRP situation. Let's go ahead. Let's read through it. A centralized system, and again, this is coming from Central Bank of India. Ripple works with 40 to 50 central banks. I wouldn't think it's too crazy that the Central Bank of India is actually working with Ripple at this time. A centralized system purposely skirts innovation and development of a transparent and accountable system, he added. Blockchain and decentralization are necessary for the success of a CBDC. Okay. It will also pique the interest of major investors in the Indian blockchain ecosystem, he added. CBDC-driven use cases and products will be accessible to mainstream technology companies in a 24/7 economy. Okay. Digital rupee will be a game changer. Okay. And then again, Ripple, they're working with the Central Bank of Bhutan, which is a country very, very close to India. I mean, like right along the India border. Very small country. But in Bhutan, their currency, their local native currency is actually 1-to-1 with the rupee. And Ripple's working with the Central Bank of Bhutan. I'm just saying, I know this guy's jumping the gun a little bit here by saying confirm Central Bank use XRP, but I can understand where the wild speculation is coming from. CBDC will be a medium of payment, a legal tender, and a safe store of value for all citizens, businesses, governments, and others which can get it converted in the bank money or cash. CBDC aims to speed up the transactions and reduce the cost. Advantages of a digital currency. After the introduction of digital currency, there will be no need to keep cash. It will work like a mobile wallet. Interest will also be earned on keeping it. The digital currency can be held in a mobile wallet or account. Along with this, its use will also reduce the use of paper currency. CBDC can also be used without internet. So, I get where he's coming from. This sounds like it could totally be XRP, but again, it's plausible, but we don't know for 100% sure. All right, guys, next part of the video, I want to go with you guys on a very, very deep Twitter thread from Financial Twitter. As you guys know, FinTwit, Financial Twitter, it's a great place. It's a lot of intelligent people in there posting these, 50 tweet threads of like how the US dollar is fucked or something. Okay. So what I want to preface this by saying is I know you guys are aware most likely of a company known as ARK Invest. Like I know during the whole like Tesla stock boom and stuff like that, the company ARK, they're very, prevalent in the investing community. And something they did today, this is a Kathy Wood person, by the way. So ARK, they draft a letter. They say an open letter to the Fed. It's quite literally titled Open Letter to the Fed. And this hedge fund is quite literally asking the Fed to cut interest rates because all the stocks they're holding are down. I mean, you got hedge funds writing letters to the Feds going, oh, can you please cut the rates? Can you boost the economy again temporarily so I can get out of holding these bags? Absolutely hilarious. But guys, This is quite a long thread, and we just got to read through it, dude. We just got to read through it. It's looking good. Because we already know this first part. The U.S. dollar is wreaking havoc globally, and it's only just starting to pick up momentum. You'd have thought by now that other nations would have bailed from its hegemony, but in reality, there's no way out. Right now, the consensus belief is that global liquidity has been deteriorating rapidly, and intervention by the Federal Reserve will come shortly when something breaks. But since nobody can decide what that something might be, this shows fear remains in its early innings. With record high consumer loans, commercial loans, wage growth, and net worths, plus trillions of dollars of liquidity still swashing around the financial system, the infamous Fed pivot remains a pipe dream. Plus, as officials become more like vigilantes, the Fed is likely to raise rates higher than anyone expects. Cleveland Fed President Loretta Mester recently revealed the Fed would raise rates even in a recession. The Fed doesn't seem to care much about additional interest rate rises. Will inflict significant pain upon the rest of the world in a move that will likely make the history books. The United Nations warned the Federal Reserve to stop raising interest rates further. That's the problem. You can't keep money dirt cheap forever. See, they cut rates to make money dirt cheap. By making money dirt cheap, I mean like loaning money, getting money for a loan. Like, you're making it dirt cheap, right? That's what they end up cutting the rates because they want to boost up the economy a bit, not let it all come collapsing down and everyone's left holding the bag, or the elites are left holding the bag, I mean. And then that's what they did. Like, during the whole COVID thing, they cut the hell out of rates, made the money dirt cheap. You boost the economy like crazy. Now, they're going to the other end of it, and they're just raising the hell out of it. Now, loaning money is no longer dirt cheap. Now no one wants to loan it. Now people less spending, less growth, like the whole freaking doom circle, okay? So in response, Federal Reserve Chairman Jerome Powell responded with a resounding no, prioritizing the Fed's domestic anti-inflation agenda over the financial health of emerging nations. These are countries starting to, again, feel the burden of living in a U.S. dollar hegemony. If the Fed continues hiking, dollar strength will almost certainly intensify, rates differentials will widen, and dollar-denominated debt will grow more costly to service, inflicting extra financial pain outside American borders. Meanwhile, however, on U.S. shores, the outlook is much rosier. Something breaking, quote-unquote, could take longer than most anticipate. If Concoda is correct about an abundance of liquidity in money markets, the threat of looming breakage lies in the most unsuspecting of places. After the Fed, with varied success, has spent just over a decade trying to create stability in money markets, imminent peril has now been transferred to none other than the U.S. Treasury Market. Recent Treasury Market data from Trace, FINRA's trade reporting and compliance engine, does show trading volumes in the Treasury Market reaching recent highs just as 10-year yields have fallen back below 4%. But this won't last. Even with a deep liquid bond market, a luxury only the U.S. can enjoy, increased periods of illiquidity will emerge as the Fed's merciless rate hikes continue well into next year. Just sounds like all like a formula for crypto to just a boom, right? It'll be surprising to most that a major goal of rate hikes is not only to set the price of money, but to devalue or destroy the value of government bonds. When the Fed signals rate hikes, higher yields follow, and the price of Treasury securities plummet. Investors who hold these securities don't just feel the pain of a loss in principal of the bond's value. If they want to sell, they must face a bond market that's entered what Concoda calls an illiquidity spiral. When Treasury market makers expect increased volatility via rate hikes, they price in wider bid-ask spreads. In this climate, price impact rises. Investors bear a higher average loss when they sell and pay a loftier price when buying treasuries. As the Fed reduces Treasury market liquidity, volatility creates more illiquidity, and illiquidity leads to more volatility, resulting in a doom loop that eventually gets too much for most market participants to endure. In practice, the three segments of the secondary Treasury market start to break down. Participants unwind trades and hoard collateral en masse. When this occurs, intervention by central planners is a question of when. The recent carnage in the UK was only a warm-up, which I think was honestly crazy. The fact that the Great British Pound and the US dollar became damn near 1-to-1. Even without the bad response to UK Prime Minister Truss's fiscal plans, Britain's bond market was destined for illiquidity spiral that unfolded. Now facing a similar scenario, the US edition will hit our screen shortly. The MOVE index, which measures short-term Treasury market volatility, has been grinding toward all-time highs. Liquidity has diminished, but slowly, without panic. For now, we're not near the extremes. During the LTCM bailout, the MOVE index skyrocketed to just under a reading of 200. This was a feat only surpassed by the 2008 financial crisis, as Treasury volume climbed to a whopping 217 as Lehman Brothers tumbled. Soon enough, though, we'll hit a breaking point when the U.S. can issue an endless supply of government paper, which is only a finite number of market participants can absorb. An illiquidity spiral is likely the end game. The Fed will respond to the come and rescue. Okay. With all these hazards, it must be difficult to believe how countries have put so much trust in the U.S. dollar and its many derivatives. But as Concoda has noted, finance is a relative game played on a global stage. Countries want to leave, but leaving requires an unimaginable plan. Abandoning the U.S. means abandoning only the power capable of creating stable capital markets. America is the sole region possessing the continuity of economies at scale that attracts a large investor base. In a world where, this is getting kind of deep, man. In a world where America plays this seemingly eternal role of global cashier, maintaining liquidity takes priority over financial sensibility. Over time, the monetary paradigm has shifted, so we desire liquidity above all else. We've turned finance into monetary alchemy. So the world now demands America not only intervene when the dollar becomes too strong, but when the price of treasuries become too volatile to handle. Most loans globally are secured against treasury paper. The repo market does over $3 trillion daily, and that's just one market. Since Bretton Woods in 1944, the U.S. dollar system has risen to unrivaled dominance, now consisting of over 26 unique marketplaces for funding. From FX swaps to euro dollars, to cross-border loans, to cross-currency basis swaps, the dollar market is the ultimate one-stop shop. Most commentators mention that countries use the dollar system, but this just understates just how institutionalized the dollar has become globally. Countries aren't simply using the U.S. dollar system. They have become essential parts powering its internals. The dollar has become such a cornerstone in global finance that countries have evolved to become essential components of a machine that would fail without them. The interconnectedness is truly remarkable, but ominous and complex. This is why China has been saying it wants to ditch the greenback for decades now, but the Asian superpower has found no conceivable escape value. When it comes to ditching the dollar, saying you will and actually following through is a different story. Each country provides a particular set of functions of the dollar system that others cannot. If certain nations decide one day that they no longer want to play ball, the dollar system quickly falls apart. Of course, so will the countries that try to exit. Guys, this just sounds like just the XRP freaking dream scenario. Like, I'm not saying all this stuff, happening is, great. I'm not saying all these bad things happening around the world is, good for humanity, but I'm just talking from strictly like an XRP cryptocurrency perspective. It just shows the absolute corruption within these government paper currencies and why you need to have something that's digital, decentralized, fast, frictionless, and holds value and plenty of liquidity to move across borders, man. That is clearly just the future because you got this whole interconnected spider web of how the dollar even operates. Fed, government, currency, the overseas countries trade, like all that shit, man. You get this like huge machine, bro, and all it takes is one gear failing, and that's the whole system. Just one spinning little gear. If that one thing fails, that has an effect on the whole entire system. So it sounds bizarre to say, but if Australia suddenly stops supplying FX swaps to its European counterparts, disastrous outcomes would follow. Meanwhile, in Europe, French financial institutions are large lenders in the FX swaps market and act as major repo market intermediaries for the rest of Europe. And get this, Japan and Canada, if French banks pulled out, European banks would not only suffer a severe dollar shortage, but Japanese and Canadian banks would too. With no stable access to dollars, Japan and Canada's financial system would quickly run into trouble. See how this whole interconnected spider web of government printed currency is gonna end to a doomsday scenario. It's gonna end in a doomsday scenario. All right, guys, I know the thread keeps going very, very long. But I think we get the point. The whole big, gigantic machine, one function stops working, the whole thing stops working. Guys, XRP, cryptocurrency, do not sell your bags. Make sure you guys Smash the like, subscribe, check the links in the description, support the channel. I'll see you guys in the next one. Peace.